What's up, Outliers? Quick market update today. I specifically want to talk about the Fed Watch tool. And the reason why I want to talk about this is because the markets are all over the place right now. And I think traders may or may not fully comprehend what's going on behind the scenes. So I actually want to talk about what I'm seeing behind the scenes. So first, let's grab the futures and let's take a look first at bond behavior. So we have ZN, ZT both down pretty significantly and trailing down hard. And if we pop over to the chart and we take a look at the corresponding yields, you'll notice exactly what you would expect to see. Something like the 10-year is now up over 4% again. This is not good. From a broad market perspective, this is not good. And as you hopefully know, I'm not in the game of doom and gloom, hyperbole. I really avoid those kind of like language patterns so that what I say means what I'm trying to say. This is not good. The reason why this is not good is because it really starts to call into question what terminal rates will look like and what this whole inflation and rate cutting picture is going to look like. And it's changing rapidly. So let's take a look at the Fed Watch tool. And I want to show you something. If we look back a week ago, there was a 0% probability of no change. Then we look back a day ago, it's 15%. We look at it today, it's down to 14%. If we take a look at the probability for a 50 basis point cut a week ago, it was over 36%. Now it's been zero for yesterday and today. The probability of 25 bips is 85%. What I want to show you is if we take a look at the historical price pattern of this movement and what this means for us is that the market is quite literally all over the board. We do not have this priced in yet. It's not priced in accurately, it being whether or not we're going to get another cut, how big the cut is, the impact to the cut. This is all completely up for grabs right now. Because if you take a look at the probability here of us essentially remaining no change, the probability for that hits zero starting on the 19th. That's this green line, by the way, if this is a little too noisy for you. That's the current probability for no change is the green line. And we can see that if we go back to 22 July, it was 53%. And then it cratered in the early August during that decline to 5%? Skyrocketed back up over the next 2 weeks to 61%. And then another month or so and cratered to zero. And now it's back up to 15.6%. This is all over the place. So what does this mean for markets? Well, it tells me two really important features. The first one, this is the same exact trade that I reviewed not too long ago in the Russell, where I made over $100,000. It was like the course of a week. And it was essentially playing a single move based on some of what I'm seeing here. And it's entirely about when does this get priced in? When does the market start moving off of this information, which right now it's all over the map. When you see this kind of change and you see this being all over the map, it tells me that this is not priced in efficiently and that we are bouncing based on every little bit of new data that's coming in, causing near 20% swings over the course of a couple days. That's huge. So when I think about trading the market in a broad perspective, we're hanging near highs, yet I see 10-year yield up over 4%. So this is a series of red flashing signs that are kind of all over the place to me. So the way I look at this is keeping the cards really close to the chest. That's exactly how I'm positioning. Because if you look at small caps, they're not showing you this 25 or even 50 bips cut. They've been running flat after a decline from the previous cut. Not showing us anything. We are, however, seeing volatility expand. We are seeing tech run sideways now for, what is this, a month almost? I mean, depending on where you want to call it starting to peak, it's been about a month that we've started this rally and then it's slowed down essentially from the 19th on. It's just been rolling sideways. And then we see E-minis, S&P 500, hovering right near all-time highs, but also massively consolidating. All of that is indecision. This is people are not necessarily wanting to weigh too heavily right now, one way or the other. Let's take a look at the COT report. If we flip through here, you can see a couple really noteworthy things. Again, we're focusing primarily not on commercials, but we want large speculators, the green line. Take a look at the movement in their positioning. We hit an extreme in 2023 about the summer. They started rolling up, positioning net positive April, and we've been hovering net positive, net negative, but take a look at the change from 16 September. This was running at negative 35,000. And then if you look at it today, 7,500, 7,550. So speculators are very, very clearly positioning here. Now, again, this is for the E-minis. So this is difficult to use. You kind of have to use it when it's at extremes. But this kind of movement pattern, again, look how jagged this is. This is large speculators flipping positions very, very readily. And it's not a defined trend, right? So you can see periods where they'll flip their positions, but it's almost like a stair step. There's still a defined trend in there. That's not what we see in their positioning right now. It is quite literally all over the map. And this is the last we saw. Again, when I say today, this is for the 30th. It lags a little bit. So I am really eager to see how this ends up resolving in the near future. The name of the game is keep a really close eye on this probability, because based on how this goes, based on some of the inflation data that we're seeing coming up soon, it is going to be supremely topical. One other thing that I want to show you is if we pop up the VIX, it doesn't look that busy, right? It's definitely popping a little bit, low 20s. There's nothing here that really jumps out at me. But then if we go into the options, let's take a look at the volume today. 430,000 calls against 233,000 puts. Take a look at where most of these calls are. They're short dated. We have 16 OCC 25s. There's 33,000 of those that traded. Then we have the same 16 OCC 45s, 22,000 of those gone. This is really interesting front positioning in options that you do not typically see. It is very strange. So if we look at the open interest and we take a look at this 16 OCC, there's 3.6 million calls against 2 million puts. And if we look at all series, it's about 9.5 million. So a critical density of that is short-term options, which again is a little less common. A lot of times you'll see it like this, where if we go further out in time, you'll notice that on the primary expiration this January, it'll typically be pretty high. And then I'm guessing we'll see around the election, also very high, 2.4 million. So this is expectation of a near-term movement. Like that's really what this boils down to. And we have CPI, PPI coming up. This looks like, it's hard to tell if it's speculating pure downside or if people hedging, but this looks like something's going on. So I am preparing my portfolio for that scenario. And then again, if nothing happens, great. That's beautiful. Roll on and simply reposition. But right now is not a time that I'm adding a ton of risk. I'm keeping what I have out very, very close to the chest, meaning ready to move, exit, flatten, adjust as needed, just because all of this looks very strange to me. So any questions, anything I should take a look at, let me know. Be an outlier. See y'all later.